People are coming to Dubai for appreciation.
Sometimes it does not happen.
They are manipulating the data.
Separate the hype from the real gold.
Maybe you are buying an overpriced property just because it's branded.
50% capital gain. What do you think about that?
This 10% return of investment, it's not for you if you buy today.
This is where the highest capital appreciation happens.
You have to check your goal first.
Would you buy an off-plan property or a ready property if you would have 2 million dirham income per year? Hello, our lovely investors, and welcome back to Dubai's Santa Gold podcast, your favorite real estate show, where we break down the best strategies for investing to obtain the highest capital gain and a strong rental return. So with you, as usual, are your favorite hosts and Dubai real estate experts, Santa Maria Kuri and Nizar Ben Said.
Hello, our lovely investors. Today episode will be different because today we will speak about the red flags, like the dating, like the red flags that you have to check when investing in a project in Dubai real estate, okay? Because we've seen it all. We've seen people making money and we've seen people making decisions based on their emotions. That's why for you as a first-time investor or experienced investor, we want to give you all the red flags so you can avoid the loss and make the maximum gain in this beautiful market.
Exactly. We want to give you some navigation so you can separate the hype from the real gold, where to invest.
So Santa Maria, there is a lot of projects in Dubai. All the projects are promising on paper, but not all of them, they will have a good return. So let's speak about appreciation because everyone is looking for appreciation. Because people are coming to Dubai for appreciation because we have a baby market that is appreciating, one of the best, or even if I want to say the best in the world, but not all projects will appreciate. Do you agree with me?
I agree 100% with you because I think at the moment we have a lot of new agents who are overpromising on all the projects. So of course, as you said, usually we have a very strong appreciation of the price for someone investing at the launch time until the handover. We see 30 to 50% capital gain on this.
Even more sometimes.
Even more sometimes, but not always. So sometimes it does not happen, but we have these agents who are giving false expectations to our first-time investors, especially the ones who are already experienced. They already kind of know from their own experience.
They are manipulating the data, so they take in the overall data of Dubai and how much the appreciation, and they're applying it to every single project, and this is wrong.
Exactly, and they give you a false promise. They say, buy now at the launch day. You don't need to even local your funds, just pay the installments 20 to 30%, and then I'm gonna resell it for you in 12 months with a 50% capital gain. What do you think about that?
Well, there is project will reach this and even more, but not all of them. That's why we will put the framework, how we work with our investors, for you to check the red flags and to see if this investment will have appreciation or will not have appreciation. So what's the first one?
I was going to ask you, but since you asked me, so the first thing we would like our lovely investors to think about is the end users of the community. So when buying in an off-plan development, you need to think, okay, this area and this community is going to be appealing for who in the future? Who are going to be renting there because the price is low and affordable? Or is it going to be more families, more home buyers who want to buy once the community is mature, once the development is ready? And why is this important?
This is very important because if we are looking at areas, for example, mid-class areas, we are speaking about high stock areas like JVC, JVT, Arjan, Science Park, all these areas where people love to rent there because it's affordable compared to the Marina, downtown and Dubai Hills, and they want to stay close to their place of home, or place of entertainment. It's one one street on Suqeim or Hissa Road, you are in Sheikh Zayed Road, and then you are in the hot areas of Dubai. Okay, so usually people here, they rent because it's most affordable, and the nature of end user are tenants. We're
In
not
those areas.
Yeah, in those areas. But we are saying this, it's not that there is no people who will buy there, but mostly people who will rent. These areas, usually they will give you a high rental income. It's a good investment, but don't expect a crazy appreciation in areas like this.
Yeah, so the appreciation can happen, but slightly lower, not that drastic. Like in the second type of areas, in the areas which are going to be appealing for end users for purchasing, not for renting. I'm talking about areas in fully fledged developed communities or in waterfront areas where people, it's going to be very expensive for them in the future to go and to rent. It's going to make more sense for them to settle down with their families, to put their children in a school next to these communities, and to purchase and not to rent. And this is going to drive your capital appreciation as the investor who bought at the launch time in this community.
Exactly. So it's very clear. If you want appreciation, the first point is seek areas where end users are mostly buyers and not tenants.
Not tenants, yeah. And if
Okay.
you're seeking for a high ROI, then you can focus on the small developments which are going to give you stable and high return of investment, but don't expect to have like a 200% price appreciation. It's not going to happen in that area in the short time, at least.
Okay.
Right?
Yes, I agree with you. So let's go to the second point, which is the quality of investors investing with you in the same project.
How do you determine the quality of investors investing in the same developments that you are potentially looking at buying as well?
So the first thing is the payment plan. So for me, I like Imar because the payment plan is very strict. It limits a lot of people of coming and investing, because some projects with a very easy down payments and with a very flexible payment plan will drive a lot of people to come and invest. And
We
these
don't
peop-
have money.
Exactly. Maybe these people, they will have financial difficulty to continue with the payment plan, and then they will end up selling a distressed deal and dropping the price of the project. And you, Santa Maria, how you defined the quality of investors?
I agree. This is a very strong point about the payment plans. And I think one more is the entry price of the community. If you're going to go to a building, you're a big investor, even if, and you want to invest, for example, in 10 studios in this building. What is your guarantee that all the other investors who bought in this building are also big investors like yourself and have the financial ability to continue paying for these studios? No guarantee, basically. So you, as a big investor, I usually advise them to go to more high-end, more luxury developments, which, you know, some people, they cannot afford to buy, which makes it more safe investments because, again, the quality of the people buying with you, they usually don't have financial
Exactly.
problems. And they can continue paying, like you said, the payment plan, and they can even enter this price point.
I agree with you 100%.
And by the way, also, this is going to also ensure in the future who is going to buy from you, because right now the demographic of Dubai, it's changing more and more to wealthy people. So it means it's actually even more safe to buy in the more expensive developments because it's going to ensure the desirability of this location. Which brings us to the next point. The supply. So tell me, Nizar, what our lovely investors need to check about supply when entering at a launch?
So if you are investing in a high supply area, usually you don't get that much appreciation, but you get rental income because there is a lot of offer in the market. So it's easy to find people dropping the price, and the appreciation will not be that strong. So the appreciation happens in the limited supply area.
So in your opinion, Nizar, where is the very limited supply areas?
The limited supply area right now in Dubai, we have the waterfront, because we can replicate any waterfront properties. So we can replicate waterfront communities inside the desert, but we can never replicate the coastline. Coastline, we have 72 kilometers, right?
Exactly. We have 72 kilometers of the whole Dubai coastline, and only 7% of it remains still available. And that's why, as real estate experts who have been in the market long time and seen seen what happened in the 72 kilometers in the developments which are already appreciated and developed, we strongly advise to look at the limited supply in the new waterfront communities, right?
Exactly, like Maritime City, Dubai Islands,
Yes.
Rashidiyat and Marina, some remaining
Palm
plots.
Jebel Ali also.
Palm Jebel Ali also, yeah. And some remaining plots in the Palm Jumeirah, La Mer, and all this. Even if this is more expensive and it's a high end.
But it's the last exclusive plots left in the ready developments.
Exactly, yeah. But these communities with high supply are not bad investment, but don't expect crazy appreciation. It's good for rental income, okay? And Santa Maria, what's the other points that define appreciation in your opinion?
So in my opinion, one very important point to look at, it's entering better a master community. This is the safest investment that you can make. You can of course go, not in a master community, but this is the safest option for you and for your capital appreciation. Master community, it means that it's fully owned, the whole plot of the whole community is owned by one developer, one strong and usually government developer who are going to control and ensure that you, as one of their first investors who entered at an early stage in the launch of their development, are going to be getting the maximum capital return because the master developer controls the prices in these areas.
So if we compare it with another area, let's say, for example, there is a plot with mixed developers. You have developer X launching at 1,700 dirham per square feet, and then another developer in the same area with the same quality, with the same configuration of the building will launch at 1,500 dirham per square feet.
Because they have to compete somehow
Exactly.
against each
and
other.
Then immediately your property depreciated.
Exactly. And when you're buying with a master developer in their master community, especially when you're buying at the early phases, you know that with each phase, this developer is going to keep on pushing the prices higher and higher, which makes you grow your capital as well with them.
Exactly. So right now, these are the points to check when you are wants appreciation. We are not saying that other investments are not good, but these are the points that you have to check if you want appreciation.
The safest way.
So you need to check the master developer, limited stock.
You need to check the profile of the end users. Is it going to be tenants or is it going to be homeowners who want to live there?
Supply should be limited. And you check, of course, the quality of investors investing with you in the same project.
Exactly. Nizar, I want to ask you, what do you think about purchasers who are super emotional and they don't actually take the time to check the data and to check the market needs? What do they end up doing?
Well, the advice I give to these people, you have to consider yourself a businessman. So when you are an investor, you are buying a property under construction from a developer and you are selling it or renting it to a client, which is the tenant or the end user who will buy it from you. Always check the data, check the needs. If you want to open a restaurant, you will not open a restaurant based on what you like, but you will check the need of the area and then you open the restaurant. Is the same applied to real estate?
So what are the needs right now in the market, you think?
So right now, the needs in the markets, we have a need for grade A offices, okay, commercial offices. We have need for townhouses and villas because we have a lot of families coming allocating here. So you have to check these data.
And a lot of businessmen, right? Who are coming and opening their businesses here.
Exactly. So that's why you have to check the data and then invest based on the needs, not based on your emotions.
Unless if you're a home buyer and you're buying for yourself, then of course you can fall in love with the property and go ahead for it. But we're giving you advice as an investor to make the maximum capital appreciation.
Exactly, yeah.
And another point that I want to talk about is actually the branded residences. A lot of people, they really like the branded residences because some of them, they really add a lot of value. But then some of them, they just add the brand name and zeros in the price, but they don't actually add any capital appreciation to your investment. They don't make it easier to resell it in the future, and they don't really add value. So actually in our framework, we categorize the brands into 3 different categories. From the strongest brand to the weakest brand, which is not going to really bring you any profit. So I want to talk about the strongest brand, which is of course the hospitality brands. Why are they the strongest brands? First of all, you have world-class names behind this development, like Jumeirah, like Bulgari, like Four Seasons, like the Dorchester collection, Mandarin Oriental, Vida Palace, and so on. And they bring the most luxury amenities and services. So you have a feeling that you're living like in a 5-star hotel, but it's a residence.
Exactly. Like, for example, the Dorchester collection, they really collect data about the residence. They can know the birthdays, they can know what's your taste, what's the color of the apple you like, and they put it based on that. And you see, they offer like a royalty services, and you see like how this brand is bringing value to the building.
It's very personalized.
Exactly. We see also other brands, like for example the Four Seasons. You see the smell of the Four Seasons that you already experience in the hotel. You will feel it in your residence. So this is something to check, because you are investor, you are investing in branded residences, and you need to check your end users after when you want to resell or rent your property, if they were looking for these services or this brand is not adding any value.
And these kind of brands are super desirable. So this ensures that it's going to be easy to resell and exit from this investment, and it's going to ensure a higher capital gain as well. Which brings us to the second type of the brand. Fashion and car brands. Nizar, you want to talk about it?
Of course, yeah. The fashion and car brands, it's very tricky. Some of the investments are good and some of them are not good. And today I will share with you how to define the good investment from the bad investment. When we have a car brand, sometimes it's an iconic building that people wants to live there for their status, like for their ego. They wants to live there because they want to live in the Mercedes. They want to live in the first ever only Bugatti residence, which is in Dubai. So this brand is not as powerful as the hospitality brand that brings value to the amenities, but it's an iconic tower. So speaking about the fashion brands, I don't see any value.
Yeah, you're right. However, in my opinion, these kind of car brands are still pretty much specific, because I've heard from my female clients that, for example, they don't have such a desire to live in a Mercedes building or a Bugatti building. So you also need to think, who is going to buy from me this property? Maybe it's going to be a single bachelor, some guy who is in love with this brand, but is it going to be desirable by so many people, like families or females, not only males? You need to think about all these things. Who's going to buy from you later on? Which also brings me to a very specific brand that I want to talk about, which I know you have a strong opinion about, which is a football brand. For example, Chelsea Residences.
Yeah, well, as a football fan, I will tell you my honest opinion. Now, not like a real estate expert, but as an end user. Okay. So for me, I support one team. Okay. If I'm not supporting this team, I will never go and live in this apartment.
Exactly. You will be against
And
living there.
especially if I am from the rival team, I will be homeless and not live there. I can sleep in the streets and not live there. I'm sharing with you, this is the mentality of people who are
Football
fans.
fans.
Yeah. But even if I don't have a problem with this brand, it will not add any value to my life to live in a brand with a football team.
Yeah, you're not going to have this desire to go and to stay in the Chelsea residences.
Exactly.
Versus like to go and stay in Jumeirah branded residences, right?
Or Address or Palace.
Exactly. So this really shows you how you yourself are limiting yourself to your future buyers or tenants. And then also within the same category, we have also some fashion brands. So in my opinion, fashion brands, they can be good, but you need to check, for example, if the developer, they just signed an agreement with a fashion brand and just paid them some money to use only the name, or they're actually using their materials, they're actually using their designers and so on to put some more value and some more personalization to the development. Then yes, it will add a value.
Exactly. There is the third category of branded residences, which are celebrity brands, either singers, athletes, famous people. So in my opinion, this is the most risky brand ever. Why? Because you are putting your money, you're investing in a project, and it all depends on the reputation of this person, which is very risky because we don't control human beings. Celebrities have scandals, they have court cases, someone ruin their reputation, and your whole investment is linked to this this person. So I would not recommend this because this is not the safe investments you can make. How
agree.
about you?
Yeah, I agree 100%. You're just gambling on someone's life and reputation. But we want to make a disclaimer. In this category, we're not talking about famous architects like Zaha Hadid, like Tadao Ando, like Santiago Calatrava. These are legends, and they will of course increase the appreciation and the desirability of your development.
And if we see this, we always end up to the goal. We come to the point that Zaha Hadid is bringing value to the building with the architecture. It's not the same.
Yeah, it's a one-of-a-kind building which has never been done before and will probably never be done again. That's why it brings something which is super exclusive to your investment, which is going to, of course, help your capital appreciation.
So now let's define the red flag. When you are dealing with branded residences, everything we said is valid. Right now, the branded residences, even a celebrity brand, can be a very good investment. But the red flag you have to look at is if these brands are hiding you from seeing the basics of real estate. Because sometimes these brands, they're just making you close your eyes on the location, on the quality of the building, of the quality of the developer, the entry price. Maybe you are buying an overpriced property just because it's branded. So the brands, regardless if it's hospitality, if it's celebrity, if it's car or whatever, it should not distract you from checking the main points and the basics of real estate.
Exactly. Couldn't have said it better. Okay, so now we have actually defined what's going to keep your capital more safe, what's going to give you a better price appreciation, a better rental income, and so on. And now I want to talk about some wrong expectations that some of the first-time investors, they have, because they never tried to invest in the market. This is their first-time purchase. Sometimes they come to me with this wrong expectation. They tell me, Santa Maria, I want to buy a ready property, but I want to get 8 to 10% return of investment from the rent. And also, I want to get double capital gain in the next 5 years. What do you think about that?
Yes, I know. I understand this kind of expectation. I wish it's true. I would put all my money in the ready market. But because some people, they have like a misunderstanding of the data. Sometimes they come to you, they say, since I was a specialist in City Walks, they come and they say, City Walk gives 10% return on investment. But this 10% return of investment, it's not for you if you buy today, because the prices already grew. This 10% is for the people who bought in 2019 on the launch, the people who bought in the first phases. So this is the misunderstanding. Areas, you cannot define just this is a 10% return on investment in this area, but you have to check also when, if it's now or 5 years ago.
Exactly. You should always understand when to enter which community, and having this kind of expectation to enter into a ready property in a prime location. This is a wrong expectation to have, because in the prime areas, this is exactly as we discussed before. This is where the highest capital appreciation happens, because this is where the end users want to live with their families, with their children, and they are ready to pay any price. They're not expecting the price to double in the next 5 years. They're buying because they want to have the lifestyle, they want to have the ready property, and it's not so much an investment for them, it's primarily a home for them.
Exactly.
I can even talk about my own experience in this. So I recently bought a property in a branded residence, which is a hospitality brand, Jumeirah Living Marina Gate. And I have been selling this property off plan. I think it was in 2018. We were selling the one bedrooms for like 1.8, 1.9 million dirhams. And what? I have been renting there since a few years, and I fell in love with the quality that they have, with the services that they have, with the amenities, with the smell, with the location, with the views, with everything. So for me as a homeowner, I cannot imagine myself anywhere else. And what did I do? I bought it now for 2.45 million. I know that it's already appreciated in capital, but do I care about this as a homeowner? No, I don't care, because I don't want to compromise on all these points that I spoke about.
As an investment, it's not a wise investment to do.
It's not the best investment. So of course, I'm not going to lose my money, because this place, it's super desirable and there's no supply anymore because all the plots are gone. But what? I'm not expecting that I'm going to buy and I'm going to flip it in the next few years with a 50% capital gain. No, but I'm not going to lose on it either. I think it can gradually still grow a little bit. Let's say like maybe 100,000 dirhams, 200 dirhams. But this is not like a wow investment, but this is a wow home for me.
Yeah, exactly. And that's why now we are speaking about the goals of investing, because you have to check your goal first. If your goal is to come to like a beautiful area, you fell in love with the area and you want to use the apartments, you want to generate some income. It will not be the highest because you are paying a high price, but you want to use it from time to time when you come to Dubai, that's fine. But if you are expecting the return, like the 30-40% appreciation with 7-8% return on investment, that's a different game.
Exactly. But as we said about the points before, that's why you should check all these points that I just mentioned to you as a home owner, as an end user, because in the future, when you buy at the launch in such a development that's going to have a check on all these points, then you're going to attract more of end users like me who are ready to pay the capital gain and because they don't want to compromise on their comfort and lifestyle.
Mm-hmm.
So Nizar, speaking about secondary market and off-plan, this brings me to an interesting question. You, as a real estate investor and as an investor yourself, what would you rather buy? Would you buy an off-plan property or a ready property if you would have 2 million dirham income per year?
That's a very tricky question, Santa Maria. But if I want to live myself in the apartments and I really want to live in this location, I will definitely buy a ready property. Okay. But if I want to invest, I will buy an off plan, because if I have an income of 2 million dirhams, which is 540,000 US dollar every year that I have to invest, imagine this scenario. If I buy every year one ready property and generate income from that, will be not the highest because it will be in a prime area and the prices already grew, or I will put as an installment and build a portfolio that 5 years from now or 6 years from now, I will have like a crazy appreciation, especially in the market we live right now. So because the market we are living right now, maybe it will not be repeated. People in other countries, the markets is mature. In Dubai, the markets still there is opportunity to invest because the city it's under construction. So I would prefer to put 2 million every year and I can build a portfolio of 11 or 15 million dirhams. And then this 11 or 15 million dirhams, even if I'm not generating income because it's under construction, but in 5 years I may double or triple my investment because of the appreciation. And if I do the calculation, it's better than taking the rent. But not all the projects will do the same. That's why a lot of people, they get promised by agents that they will put 11 million in the market and 5 years from now, they will have crazy appreciation. Not all projects will have this. So that's why you have to be very careful in choosing the project that will have crazy appreciation and checking the points we mentioned before.
Nice. I love this kind of strategy to maximize your portfolio than to buy something ready.
Okay, Santa Maria, now let's be honest. Let's turn off the camera, okay? And I want you to tell me honestly. Forget that you are a property expert, but for you, if I give you now 500,000 US dollar, where do you invest it in this market right now?
So for me, as someone who loves beachfront properties and the lifestyle that these kind of communities give, I would 100% follow the success of existing communities like Blue Waters, like Pearl Jumeirah, Palm Jumeirah, and so on. I would definitely go and look at Maritime City or Dubai Islands, which is going to take a little bit longer time, but in the long run, it will give me an amazing return of investment.
So why is that? Why you choose this? Look, this is your own investment. It's not just saying information.
Because I really believe in these communities. I love the master plans. For example, in Maritime City, you will have a beach at the end of the island, which is reminding me of the Blue Waters Island. You will have a Dorchester Collection 5-star resort there. You will have a forest district, which is actually even an additional feature than to Blue Waters Island if we compare. You will have the whole lifestyle. It will be all connected. The Mina Rashid, the Dubai Islands. I see in the next 10 years, it will be a happening place for tourists and for residents, I think.
I agree with you.
And what do you think? Where would you invest $500,000 if you had the chance, Nizar?
Well, I don't want to look like I'm copying your investment strategy because I would also do the same because I also believe in this area and like the starting price is literally literally nothing compared to other areas like you mentioned, Blue Waters, and even if these areas are upgraded the version of these islands. But I will also go with the same budget to a townhouse because we have a shortage of townhouses. Because right now in Dubai we have families moving. Like if you see the transactions, we are in 609 billion dirham transactions, and almost half it's ready properties in the resale market. So in the resale market, which means that there is a lot of people are coming and allocating to Dubai. So which means that there is a lot of family are coming with all the investments that Dubai is doing, and with the D33 and the 2040 master plan and the allocation of big companies in Dubai, we have families coming. The family is coming now and families that will come in the future. So I will definitely invest. If you will increase my budget a little bit, I will give you a different story, but I will invest in a townhouse. I can get affordable townhouse in a prime location, in a family community, close to schools, to hospital, to everything. And I'm very sure that this investment will do the same return as your waterfront property.
I think it's a very responsible decision from you as your man to go for a townhouse for the family. I like this option. For me as a woman, I can go buy a beachfront 1 bedroom. It's okay. But the man, let the man buy the house.
Okay, that's good. So 3 kids, 3-bed townhouses.
So we hope that this episode was very helpful to you, and now you have some more understanding of the market, what to check, what to follow. But of course, you can always feel free to reach out to me or to Nizar for more guidance and more advice for your specific case.
We all agree that Dubai market is the best market in the world, but not every project is good for you. So you have to check first your strategy. Check your goals, what you want from your investment. Do you want high return on investment? Do you want high capital appreciation? Or do you want both? Do you want to save your money in an asset? Do you want to come and visit Dubai and enjoy this lifestyle? So put all this into perspective and then take a decision. But before taking any decision, check the data, check the need of the market, see all the red flags that we shared with you. Not every project will grow the same way, or maybe some project will not grow. So you will lock your capital in something that will go very slow. So be careful and check all the red flags before taking any decision.
So guys, thank you so much for watching. Please like, subscribe, comment, and reach out to us for more details and personalized consultations.
Thank you guys. See you next time. Bye bye.